How's it going, traders? It's the Pup of Wall Street back with another weekend review. Today, we're going to look at my top sectors, top tech charts, and my top 10 charts going into next week. So, if you have a moment, please make sure to like this video and subscribe to my channel below. These two actions will help more people see my work. Also, don't forget to hit the notification bell so you know when my videos come out. If you have any questions, please leave a comment down below. Let me know what you think about these charts. And lastly, keep in mind, this is not financial advice. I'm doing this for educational purposes only. So let's dig into the charts. So you'll notice something different this week. Normally, I do 3 videos. I do 2 public videos for YouTube, and I do a private video for my members. So what I'm going to do this week is I'm going to combine everything together. So this is going to be one long video. So the good thing about that is I will have chapters down below. So if you want to skip to your favorite stock or your favorite name, you can do that below in the comments, and you'll see the chapters there. All right. So before we dig into this, just so you know, I am on Twitter, and every weekend I put out a Twitter thread. And basically, what I'm doing is I'm going over the weekly charts. I'll drop all these charts here with some notes and some friendly reminders. But also, I throw in some, some more interesting things. So here's a link to Chris Cavaco from Cavaco Capital. And he's talking, I love his videos. If you get a chance, I would highly recommend subscribing to his channel. He's talking a lot about what's going to happen potentially in October. He doesn't make predictions, but he presents the data and shows us what to look for. And I would highly recommend, and you can go to my Twitter and sign up. I've got about 42,000 followers now. And yeah, but anyway, later on, we're going to talk a little bit about some of the top 10 charts that we're going to be looking at for next week. I think those are going to be very interesting. And even though we're in a bear market and the market is declining, that doesn't mean that every name is declining. And my job for these videos and for my members is to identify where that relative strength in the market is and have good tradable opportunities to the upside while still looking at some downside price action as well. All right, so first up is going to be the DIA. This is your Dow Jones Industrial Average. And you can see this has been waterfall price action for the last 3 weeks. We are on a weekly chart. The orange line here, this is going to be your 30-week moving average. And then the purple lines, these are going to be your anchored VWAPs. This happens to be anchored to the COVID low. So you can see weakness against 50 on RSI. We got a MACD cross under. My next target to the downside on the DIA is 283, then 275. If we lose 275, I think the likelihood of 253 being that 618 retracement from the COVID low to the all-time high being very possible. And you could see the falling broadening formation here. If we extend this line out, we have another few weeks. You could see how it can come back and test the bottom. You could see test, test, test. I would expect, maybe another test there. And again, it doesn't have to. It could bounce back up here, come back up to the top of the broadening formation, and then continue down. We just don't know. But right now, I could say that my downside target is going to be 275 with a pit stop at 283. Next up is SPY. I think this is a little more interesting for everybody. You have your COVID low anchored VWAP, you have a 2018 anchored VWAP low, and then your 2016 anchored VWAP low. So these are basically looking at those lows, tagging a VWAP anchored to that low, and seeing where price falls. And so you can see we came into that COVID low anchored VWAP, we bounced, came back into it, we lost it. It looks like we're coming right back down to it here now on that 2018. So, yeah, what's interesting about this level is you do have a 50% retrace at 349.17. This would be the first area I would watch for a potential bounce. If we get that bounce, then maybe we could see a move back up to 380. If not, maybe a bounce and a retest and then a potential fail, then I would watch for a move down to 318. And if this 2016 continues to rise or maybe flattens out, maybe when we reach that level, that's where the 2016 anchored VWAP low will be. So first 349, then 318. Now, these are big numbers, right? And we're looking at a big time frame, a weekly time frame. What I give my members is 30-minute charts and 30-minute charts with intermediate levels. And so those intermediate levels would be the short-term levels that we can either day trade or do short swings on. And I basically do 30-minute charts for about 15 names or so. Certainly SPY and the Qs being two of those major names. All right, talking about the Qs, QQQ, same idea. COVID low anchored VWAP, 2018 low anchored VWAP, 2015 low anchored VWAP. And so you can see here, we already lost the COVID low anchored VWAP. We lost last week the 2018 low anchored VWAP, and our 2015 low anchored VWAP is sitting at 229.02, which also happens to be a 1618 extension from that swing right there. So levels I'm watching below, 258, 251, 229 to the downside, weakness again on RSI, MACD crossed under, and momentum turning negative. So the data is showing us that the market looks really weak. Historically, we see bounces in October during bear markets. Those tend to be bottoms, but it's not always the case, right? I would highly recommend checking out that thread that I talked about on Twitter. It goes into some of those cases. All right, next up is IWM, COVID low anchored VWAP, 2016 anchored VWAP. We lost the COVID low already. Bearish engulfing candle 3 weeks ago. That signaled to sell off these last 2 weeks. We're back at 164, right where we were back in June. These are testing the June lows. 187, 188, that's going to be your resistance to the upside. Once we get back there, whether it's on a rally in the short term or we take that low and then maybe next year we retest it, this would be the very big area I would watch. Obviously, got a lot of supply up here in the 210 to 225 region, but we'll talk about that when we get back there. But again, weakness on RSI, MACD crossing over, negative momentum on MACD. So under 164, 152.47 is going to be my target to the downside. That's going to be your 618 retracement from your swing low anchored VWAP to your all-time high. Okay, let's take a look at the dollar, right? This has been a hot topic for the last few weeks. We came up to that 102.50 region here, and you could see here we kind of stumbled on it for that first week or two that we tested into it, but it just rocketed right after. And so for the last few months, actually a couple of months, we have just been skyrocketing. The US dollar is on fire. Now, something to note. Back in 1987, I think it was, we had that spike high. RSI came up to 82.59. Back in the 2000 dot-com bubble, we had that spike high. RSI came up to just about 75. The 2015 bear market, 2016, came up to 102.47.4. We had that spike high, right? Look at where we are coming into now. So this does mean we're close, right? But we can have another couple of months before we come into these highs, 120, which was from the early 2000s. I think it was like 2001, 2002. But we still aren't quite there yet, which means we could still see strength in the dollar over the next couple of months. So keep this chart in mind. Once the dollar tops out and starts to roll over, then that's a good time to go long growth and tech stocks. All right, so that's the top industries. Now let's look at individual sectors. We're looking at the BJK. This is your gaming sector. DraftKings, Las Vegas Sands, MGM, Caesars. I've been watching this one. It's been holding up okay. We did put in an inside week, and we lost this wedge, the symmetrical wedge to the downside. We do have a squeeze setting up. We do have weakness against RSI. We didn't quite cross under. We did not quite negative on MACD just yet, but this would be an area, if the market starts to rebound, it has been showing slight relative strength. This would be an area I would start to watch. Next up is XBI. Inverse head and shoulders here, right? There's your left shoulder, there's your head, potential right shoulder here, your neckline right at around 95.48. So keeping a close eye on that. We are coming into our golden pocket reversal between the 618 and 65 retracement on that swing right there. We bounced for 2 weeks off of it, right? Inside week off of that declining 30-week moving average. I think we get back over that 30-week moving average. I think these are risk assets, but that would be where I would certainly be watching. I would say biotech is probably the top sector that I'm going to be watching. You can see a little weakness against 50 on RSI, but MACD, kind of flat, still positive momentum. So I think we're looking okay here. A lot of names have been showing up on my scans in terms of relative strength in biotech, but again, it is a risky asset class. And last but not least is XLV. These are going to be your healthcare names. Now, we did get a TTM squeeze firing. It looks like it might fire to the downside. Again, watching this 118 level, which was prior low, we did lose the 125 level 2 weeks ago. And I would like to see healthcare back over that level for a move back up to 137. Could be a pretty good short under 118. And again, I'm showing these charts, these last 3 sector charts. Yes, they are looking weak with the rest of the market, but they're not looking as weak as the rest of the market. So if the market starts to turn, my eyes will look to these 3 sectors for potential relative strength. All right, so those are the top sectors that I'm looking at. Now let's start looking at the top tech charts. So first up is going to be Apple, and again, we're working on the weekly time frame. And here's a 30-week moving average. Again, your COVID low anchored VWAP. We lost the 30-week moving average 2 weeks ago. Last week, big waterfall price action. 133, 128 are going to be my levels to the downside to watch. If we lose 128.88, then 118 and 100 are next. Again, weakness against 50 on RSI. MACD crossed over and negative. This here, very important candle. This is a double key close reversal. And that means basically this candle, bearish engulfing on the previous 2 candles and closed under the lows of those 2 candles. It's a very big reversal signal. And you could see price action dictated what that said. So we lost that 618 retrace from that prior swing high, swing low. Now all eyes go to that high and that low, and this retracement at 1618, at the 618 at 102.72, but also the 1618 extension off of that swing at 98.83. I think if we lose the COVID low anchor VWAP, that's going to be my target to the downside. Next up is AMD. We took this short at 72.91. This has been a really good short so far. About 10 points to the downside. We hit that first target at 63.01. We lose 63.01. I'm looking at this demand zone here right at around $51 to $54. That's likely where we would bounce next if we fail below 63. Again, TTM squeeze, 4 weeks fire to the downside. Here's Amazon. Another one that's pretty weak. I think it's a good short under 104.28. It looks okay here. It's still inside of our prior swing. I think harder to trade it within this zone, but I would be shorting this under 104.28. I did put out a short alert at 122.17. Very similar to what we talked about on AMD. This was a pretty good short, but very difficult to short it here because we've already been 3 weeks down with price action. So, I think what I'm watching for is a target to 104 on the short under 122. And then under 104, I would short it again, potentially back down to 100 and then 89. Next up is CrowdStrike. This one's hold up actually pretty well. It's shown relative strength in the tech sector. So, we tried to hold on to that 165.24, 50% Fibonacci retracement. We couldn't quite hold on to it. We're right there though, so I would keep a close eye on it. 2 weeks rejected off that COVID low anchored VWAP. We're still trading under our 30-week simple moving average. We do have a squeeze that's setting up, but it looks like momentum is starting to shift down. MACD is intertwined with negative momentum. RSI is under 50. The way I look at this, good short under 134, good long over 200. I think, again, trading it in between, yeah, you can catch some day trades, but it's harder to choose direction when you're stuck in between these big levels. Next up is Datadog. I think this one, again, looking pretty weak, like most of the tech stocks. Bearish engulfing candle, double close, key reversal, 2 weeks now. We tried to hold on. Actually, we put an inside week, but I would say on the weaker side of an inside week. TTM squeeze setting up, RSI looking weak, MACD looking flat. I like this short under 83.50 with a target of 73.02 if we get there. Next up is Google. So Google lost the 50% retrace at 101.07. I did not put a short alert out on this, but this was a good short under that 50% retrace, targeting 89 to the downside. Certainly anything under 100 looks really bad. And I think under 89, right, we've got that demand zone right here. Next demand zone is going to be right at around $77. So if we get back down to 89, watch for potential bounce reversal. But if we fail at 89.16, I think you could short this down to about $77. And we did fire a weekly squeeze to the downside. Google looking weak. Again, this is I don't mean to reiterate myself here and keep talking about this, but tech looks very, very weak. So short alert went out on Meta at 155, caught all of our price targets down to 137, and this is still looking really weak. It's looking like it wants to come down to 123. You could see 123 being the lows back here in January of 19. We've already lost the lows of March 20. Under 123, 106.36 would be my next target. Next up is Microsoft. So Microsoft long-term, I don't have it all on the chart here, but from 2016, bounce low, bounce low, bounce low, we finally lost it. So this was a really big fail 3 weeks ago on Microsoft and a really good short under 250. 200 is probably coming next. You got a supply zone here, or demand zone, I should say, right at around 200 to 210. You have your 618 retrace at 190. I think, again, this is likely where we're headed, but harder to short it here when it's already failed at these levels. Next up is NVIDIA. Semiconductors really, really weak in regards to the tech sector. You can see 3-week squeeze fired to the downside. We're coming to oversold conditions. MACD negative and crossed under. What I'd be watching for is this purple zone right here for a potential reversal. So you've got prior areas of support, right? But the more times you test that support, the more likely you're going to start breaking down from that support. So harder to short it here because you can see, we're pretty much out of the last 7 weeks, we're 6 weeks red, and so when you see like price action like this, you have to expect at some point you're going to get a counter trend rally. So at some point, maybe it's down into this 109 region. We get that counter trend rally. I think it's tradable to the upside, but I think any tests back to that 122 level, say we come down and we come back and back test it, I think it's a good short on that level. Here's Shopify. Again, another one that short alert went out at 29.68. This one just starting to go. Hit our first target at 26.95. Next target long term is going to be 21 and then 17.77. We do have a squeeze setting up. The problem with this one is bullish divergence. So you have RSI and MACD making higher lows while price is making lower lows. So this is bullish divergence. So it's a good short for now, but I'm going to be watching this one very closely for a reversal potentially. Next up is Snow. This one's been showing some pretty good relative strength as well. Possible cup and handle right on that $200 neckline. RSI holding right at 50. TTM squeeze rising and setting up. MACD crossed over back here at the low, moving higher. Maybe we need to pull back a little more, but I like this over 167. We continue to hold over 167. I like this back up to 200. Over 200, I think you've got a nice potential move to the upside. And our last tech stock that we're going to be taking a look at this video is Tesla. Now, I did have this potentially as a wave 1, 2, 3 ABC pullback potentially, right? But if we fail at 260, definitely if we fail at 248, it invalidates this count and something else is going on, and we're likely going to come back down to potentially test this swing low anchored VWAP from March of 2020, which we have not tested. So yeah, I'm watching this one really closely. I love trading Tesla. It's a great day trade, great name to day trade, a lot of liquidity in those contracts. But I want to see, can we hold 260 this week? If we can hold 260, I think we got a shot at this potential wave 5, right at around 350, 360. But bearish engulfing candle, right? We know what that means, weakness. And so watch for potential more weakness. I don't go into each week with any kind of bias. I'm more of a technician in terms of looking at the charts, and just have to look at this from a technical basis and understand where we are. So Tesla for a little while was showing relative strength, but now potentially rolling over. So under 260, I think this is a really good short. Possibly back down to the lows here at 200. So, but I'm definitely watching for that reversal between 248 and 260. So anyway, that is the final name in my tech stocks. Before we go into my top 10 charts that I'm going to be watching for this week, just want to let you know that I do have a paid service that I've been running for the better part of the last 2 years. And basically, every morning, an email goes out with my top trade ideas for the day, updated levels of what I'm watching. I update SPY, update the Qs, I update the dollar index, everything that you're going to need to know to trade for that day and for that week. I do have 20 hours of training videos on my platform. I put out this weekly video. So what's going to be different this week? I'm going to put out the full plan. Obviously not seeing the morning emails, but this is my weekly setup of what I send to my members. So you're going to get the full experience this week for free, and then the preceding weeks you're just going to get the sector update and some of those tech chart updates. I also hold a bi-weekly office hours. It usually runs about 60 minutes where I do a midweek review, and we also do a Q&A section and a chart request. And also my day trading levels, which I mentioned, also it's the 30-minute trading levels with all the levels that you're going to need. These levels are really, really good. It's what I use to day trade. And so basically, that's going to be $129 for 3 months. I think that's very reasonably priced. I see a lot of these services are $100 a month, $150 a month. I'm not going to be up in that range. I'm never going to be up in that range. I want us all to eat together. I do offer an annual package at $479. That includes a 1-hour call, one-on-one call, and it also includes my Fibonacci course, which is just about done. And then I also have a plan that's $699, and it's basically the same as the $499, except I include 3 one-on-one Zoom sessions. So these are kind of an Ask Me Anything. We could do chart breakdowns. We could do trade breakdowns. Basically, I will work with you to make you a better trader. One of my strengths as a coach is helping people identify their strengths and their weaknesses and adjusting how they trade so that they're more profitable and they're better at identifying where the relative strength and the relative weakness is in the market. And then the last plan that I offer is my is my lifetime plan. So this gives you lifetime access. You don't have any recurring fees. It also includes 4 one-on-one sessions, and you are locked in for life. And so, I've been doing this for many years. I have no plans to stop anytime soon. This price will go up when the next 2 seats are filled. Basically, every 5 seats, it goes up in price. The next price level will be $1,500 once these last 2 seats sell. So if you are interested, I would highly recommend to jump on that. I actually got an email from a member saying, man, I wish I would have jumped on it when it was $9.99. I waited, and now he's a lifetime member at $12.99. So it could have saved him $300, but regardless, this will go up probably in the next couple of weeks. All right, what else do we got? We got my weekly newsletter that's going out today. Today being October 2nd, it goes out every Sunday. I've done 81 issues. This will give you a full rundown. This is completely free. I have over 4,100 people that are subscribed to this newsletter, so I would highly recommend. It is free, so jump on that. All you got to do is go to this link. It's also in my bio. Drop your email address, subscribe, and every week you'll get that email. Sometimes I do a midweek review and send out ideas as well. And last but not least, Instagram. If you are only interested in my charts and also some cheat sheets and some ideas that I put out in terms of how to identify strength in the market, then follow me on Instagram, right? You could see lots of charts that I put out some motivational quotes, some comparison charts. No nonsense. It's all charts. All right? Okay, now the time that I think most of you have been waiting for. Hopefully you're still with me. And if you are still with me, please make sure to hit the like down below if you enjoy this content. It really helps with the algorithms. I see that, I get multiple hundred views on my videos, but I only get like 10, maybe 15 likes. So, maybe people don't like this content. I don't know. But if you do, hit that like below. And if you really like the content, make sure to subscribe to my channel. That would really be appreciative. Okay, let's look at the top 10 charts that I'm looking at for next week. First up is ARLP. And honestly, you're probably not going to hear or know a lot of these names. And so it's actually a good thing. I like to identify names that no one is looking at because everybody's looking at Tesla. Everybody's looking at Apple. No one's looking at ARLP. Okay. Came down to the 618 retrace right at the bottom of this wedge. We bounced right at 2108. Came back into $24 near the top of this wedge. We're over a 200 SMA. We're slightly under the 50 SMA. We had a squeeze fire that looked like it was firing to the downside, but now it looks like a slingshot squeeze. MACD is flattening out. A little bit of resistance on 50. I like this over $24. Alerts will be set. Alerts will go out into the Discord. Next up, BSM. So, low, higher low, higher low. We got a squeeze setting up. We're over 50 on RSI. MACD looks like it's curling, ready to cross over. I like this over 1660. Here are your targets. BTU. Put out a trade idea. I think back here, we broke out. We hit 2 targets. We reversed. We came back. We bounced, hit that first target again. We reversed. Now we're back through the trigger again. We hold over 2352. Looking at these targets to the upside. No squeezes to note. We did get that squeeze firing back here. Looked at MACD crossover. Looked at RSI breakout. BTU looking pretty good. CALX. Coming back into 62.62. Resistance, 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 resistance. The more times you knock on a door, the more opportunity that door is going to open. Got a long-term squeeze setting up. MACD's already crossed over. Look at the back test on RSI here on 50. Nice bounces. Watch CALX over 62.62. Specifically looking for a daily close over that level. Next up, CCRN. Put out a trade alert on 9/18, over $30.40. This one has not triggered. So here we go. Resistance, resistance, resistance. How many times are we to knock on this door before we break out? Ascending triangle, higher low, higher low, higher low, higher low, higher low, right? Could we buy the bottom before the breakout? Sure. Just make sure you keep your stops under that prior low. Next up is DINO, right? Higher low, higher low, higher low, higher low. Nice push here on the back test of 48.13. We've got a slingshot squeeze setting up. RSI is over 50. MACD just crossed over. Could we take a trade over 54? We sure can. But watch these 2019 highs at 58.81. Resistance here. Again, potential cup, handle. Really nice setup here. This is DINO. Next up, EDU. We had this nasty gap down, really big gap down, right? Gap down, tried to break through, couldn't. Tried to break through, couldn't. Tried to break through, couldn't. Could this be an inverse head and shoulders? Certainly looks like it to me. So what I'd be watching, first, break over 50 SMA. Second, break over 29.60. We enter the gap. This can move pretty quickly back up to $60. So watch EDU. Set your alerts for 29.60. Next up, Netflix. We've been all over this since August. We had the break of 218. We hit our second target at 251.83. I put in a second alert at 252. We're trading in a range. We're between 218 and 251. Let's see how long we could build this base before we eventually break out. The significance of 252, this monster gap right here. So what I would do is if we get that break over 252, I would take a trade up to the declining 50 SMA. Don't know where that's going to be when we get there. It could be at 280, could be lower, could be a little higher, but that's where I would trade it. Squeeze setting up, right on 50 RSI, MACD closed entangled. Two more names. PDD, Pinduoduo. Trade alert went back out in June over the 200 SMA. We gapped over it, and we also gapped over the 50. Took that trade right up to 68.12. It started to fail. Now we're back testing that 50 SMA, and we're back testing this trend line breakout. So this one looks pretty decent. We may need to fill this gap here. If we do, and we back test that 200 SMA in red, that could be an area to take the trade back up to $68. Okay, MACD crossed under, but it's starting to curl. RSI right at 50. All right, last, certainly not least, WWE. Who wants to wrestle? So we got a beautiful channel up here. So we hit that channel high, right? Channel low, channel high, channel low, channel high, channel low. So what was the trade? Break out of that trend line right there. So I think we could take this trade now over 70.19 up to 75.13. It's a short-term trade, right? But if we get over 75, then 79 and the top of the channel would come next. So RSI curling up, broke 50, MACD curled and crossed. Momentum is positive. TTM squeeze, slingshot setup with rising momentum. Really, really nice setup. So, ladies and gentlemen, that is my full weekend review. I would highly encourage you, if you like the work that you just saw, sign up for my service. It's not even it's like $1.25 a day. It's well worth it. With one trade, you will make your money back. And on top of all that, you get my ear. If you have any questions, you have any chart requests, you need me to review a trade with you, DM me on Twitter. That's the easiest way to get me. And that's it. Hope you enjoyed. Got this under 35 minutes. So thank you. I appreciate everybody that watched this all the way through. Appreciate that 35 minutes. Hopefully it helps you next week in the market. Take care. Be safe. Remember, October, this is going to be the make or break month. Do we see the bear market reversal like we normally see in bear markets in October? Or do we get slammed back down again? Well, we can only take it day by day, but rest assured, I will be on this job. Take care, everybody. Have a good one.